Hi, good evening. Hi, Praveen. Hi, Mr. Gulati. Hi, Fagun. Hi, Sovraj. Hi, Meher, Srini, Sridhar, Pradeep, Vikram. Hi, everyone. Hi, good evening. Just gonna mute myself here. Hi, Vivek. Hi, Obrino. Guys, tomorrow is a really, really important day in terms of market direction, in terms of where market will head going into this year. Hi, Kiran. Hi, Prakash. Hi, Deepak. Hi, Vikas. Hi, Raj. Hi, guys. Welcome to my daily live stream. Uh, just to start this, I will give you the agenda for tonight. Like, I'm not going to go through all the ES, NQ, and my watch list. Today, I'm only going to talk about two things: ES, NQ, and my understanding of CPI. Because just to be honest, I'm still trying to figure out the mapping or the baseline of CPI. Because until now, this baseline was 2 years back, and we used to take that as a baseline and compare it. And this time, I'm not sure because they have changed the weightages, and weightages like those weightages are unknown at this time. You may have, like, if I open up, let me open up the CPI weightages. It's not that they have changed anything related to the formula, but they have changed the CPI components weightage. And those weightages will be periodically updated. Like they used to be 2 years. Currently, before that, it used to be 10 years. Those component weightages, but now they're going to be every single year, because that gives you an intent of how stronger or how near the inflation is to the real life. So these are no. So this is like, if anybody wants to understand what they are doing with CPI weightage information, this is the Bureau of Labor Statistics. You can go there and understand that. 2023. This is something which is unknown. Relevance of consumer price index weights. This is going to be changed, and they have given a very clear example that if they do the survey in 2019, 2020, they used to take that as a base, and based on that, they process the data and measure the change in the next year. Now, instead of 2 years, they are going to do the survey on 2021, make the baseline as 2022, and then compare from 2023. So that's what they're going to do for January. So if I give you a very simple, let me open Paint. If I give you a very simple idea of what they used to do and what they want to do now, and then based on that, because I'm still trying to learn this new mechanism. So initially what they do was, like, for example, in 2019, 2020, they do, like, Bureau of Labor Statistics, they used to do a survey about spending habits. And based on that, they used to define the CPI component weightages. They have 9 components and each has a weightage. Okay. Then they used to mark a year as a base year, that this is the base year. So if you take, let's say, 50 points in this base year, so if we compare into 2022, any move above 50 will be your percentage increase or decrease. For example, it's 51. So that's a 2% increase in CPI. Now, what they are going to do in from tomorrow, they are not going to do this 2019-22 survey. They are going back to 1 year survey, which is 2021. So in 2021, looking at the spending habits in 2021 were really, really tight because it was just out of the COVID. People were still not like spending much. Crude was at that time not so high. And then the housing was getting a definite boom. So based on that, we might have some new component weightages. Right now, like housing and shelter is about 47%. This may change. Food and items is about 18%. Transportation is about 18%. Energy cost is about like few percent. So this may change. And with 2022 as a base, so they will compare what was January 2022 price of crude versus 2023. Based on that, they will calculate the inflation. This is a real term inflation, but comparing it with 2022, we need to see, because in 2022 January, crude prices were really high. So we may see definitely a downtick on what you call crude prices. And I can give you that information in the charts as well. If you look here, let's go to the crude. So in 2022, let me open a 5-year. This is 2023, January. If I go to January 2022, okay, crude was on an average around 85. In January of 2023, crude was an average around 76 to 77. Okay, so this shows that yes. Oh, cannot see my screen. I'm sharing the screen. I can see the screen. Meher, you may have an issue because I can see on the chart. I can see live. So coming back to this crude. Crude has come down to about 76, 77. So this shows that yes, crude inflation has come down. Now, depending on the weightages of crude in the new CPI calculation, we need to figure out whether it is less or high, because previous component weightage of crude was or energy was high. Then we need to look at the rental prices, the housing rentals. The housing rental in January of 2022 was high. Since then, it has come down because the benchmark price is high. And when the benchmark price is high, if you compare that benchmark price with today's price, you will see certain kind of offset, which will bring the CPI lighter. That's what my understanding is. Okay. If any one of you has a different take on it, let me know. Because I can do one more thing. CPI component. Wait. Let me pick up images. So this is like an example of CPI index component weights. So you will see that housing is about 42%. So housing in January 2022, housing meaning rentals, shelters, everything. It has come down, not substantially, but yes, it has come down. The cost of transportation, yes, it has come down because the crude prices have come down. Apparel, I don't know. how much it has been spent on apparel. So that's something we need to figure out. Recreation, recreation meaning going out into any of like Airbnb, travel, something, all those things comes under recreation. Education and communication. These are pretty tight. They may not change that much. Goods and services, food and beverages. So it's going to be a tough ask. Housing and transportation, I think, will be the big game changers because they have definitely eased off from January 2022 to today of not the last month of 2023. So my expectation is we may have a little like last time we had let me open that one as well. Investing. Again, it's very difficult to figure out this. Uh, because this is the first time they are going to change the percentage component weight. So it's going to be very difficult to figure out. So they're expecting the CPI to be 5.5, 5.7. Now, depending on the new CPI, the new mechanism, as of now, I think we'll be in the touch region of 6 to 6.2. I don't think so. We're going to go way above than 6.2, 6.3. If it goes above, then it's going to be difficult for market to sustain. Then it shows the impact. But again, there is a sentiment regarding the CPI. Then there's also a technical setup which is there in the index. So I'm more of a technical trader, but this macro information, I just try to use it to make sense with my technical setups. So I expect CPI to be in the range of 6 to 6.2. I don't think so it's going to go much higher than that. Expectations are around 6.2, 6.3. If it goes more than 6.3, 6.4, I think that will be negative for the market. But again, it all depends on how the weightages are defined. If the weightages are less for housing and more on apparel and something, then we need to figure that out. So my take is it's better not to jump at 8:30, understand those weightages at 8:30, because that will be the first time those weightages will be out, and then understand the number. If the weightages are something in line, like they are like minimally changed, then it's fine. If they are drastically changed, then we need to take a peek into those weightages, understand them, and then go long or short. My take is we are setting up for a bull flag, and if the bull flag sustains, we should see 43.20 in the near term. If that bull flag fails, we are going to test 39.95. That's what my thought is. So, any questions or any thoughts if you have, and let me share the Zoom link right away, because this is something which is a little tricky. So anybody, if you have a different understanding or if you have more clarity on the CPI, I would encourage you to please come over and please share your thoughts on this. And I've shared the Zoom link. You can all join in the Zoom link. And the more we can like talk, discuss, we'll have better idea. I try to read about the CPI throughout my commute time, throughout my day. I still may not have a 100% clarity, but I shared what I could comprehend from all the documentation which I could find. I think the Department of Labor Statistics or Bureau of Labor Statistics gives you a clear idea of what they are doing. So guys, anybody who wants to share their thoughts can please join in and discuss, and please give their understanding, share their understanding on CPI and what could be a possible move. Like 6.2 is a really big number. It's not like if something previously was 100, now it's 106. So I think, see, to make the market fly, I don't know, Rafiq, how to handle that, address that. But expectations are that, see, if you, I'll give you a very simple example how to compare this process. Supposedly, in your university, right, you got a 50% score, okay, in your first semester. Now, in your second semester, you got 52% score. So it means you have increased your potential by only 4%. Okay. Same thing is here. If the benchmark is 2020, it means that instead of 50, the benchmark is, let's say, 100. So last time you scored 100. This time you scored 101 or 103. Like you have 3 basis point or 3 points higher than the previous time, but still the increase is 3% instead of 4%. So it's a little tricky. That's why I'm saying come onto the mic, talk, share, and we'll talk. Yes, Vivek. And you
Uh,
work on numbers, Vivek, right? In your university.
I'm sorry, Naval, can you repeat it?
I'm saying you work on certain numbers, right? In
Uh, the thing is, I'm a student. I'm still learning Naval, but
That's what I'm saying. You work on numbers. You try to
yes,
understand the numbers.
yes, I do try to understand the numbers. So I was looking into the indexes and like what is the new formula, and I realized that like just like as you explained, then I was looking into different indexes which got released. So for example, if you can look at used car Manheim index, it has gone up like significantly from past 2 months.
Used car.
Manheim or used car index, if you type used car index. Yeah, Manheim. Yeah.
Hmm. Okay.
Scroll little bit bottom and like you can see the download spreadsheet.
Can I image? Not,
Yeah, enlarge image. Uh,
no, it's not that one.
yeah, I was looking in the Excel sheet now, but yeah.
Yes. So we have
Uh,
a sheet.
yeah. If you scroll to the bottom, you'll see like yeah over here. So look at
We need
the
to
index month over
compare.
month and index year over year. The
These are the two lines which
yeah.
are important to compare. Because the benchmark is 257 now.
Mm-hmm.
So when you compare with 257, 224 is weak. So it means prices have come down.
But if you look at the index month over month and index this one, those were at 0%, but now they are at 2.5%.
See, month on month, this will be month on month.
Yeah.
December 22 to January 22. So there is a definite increase here. But
Mm-hmm.
problem is that they are this where is the sheet? This is most important. CPI year on year,
Year on year. Okay.
right? So year on year, the benchmark, the baseline is changed. So when you compare 257, that's like 100%. So this is like about 80%, right?
Hmm.
So from this, if you compare January 22 to January 23, it has eased off. So I went and compared all these things already. I'm missing out on apparel. I'm missing out on education and uh, what you call a medical side. But again, I don't know what will be the weightage of this. Right now, the
Hmm.
weightage is about 18%, right? So what will be the weightage in the new? This has come down. Similarly, crude has come down. that adds to the transportation. Housing, if you will compare, it has come down. If you compare, you will see that yes, housing has also come down from the peak of 2022 to now. So again, if the benchmarks are higher and the current numbers, even if they're higher, but they will still be lower because we have peaked out the benchmark.
Hmm.
It's like when you
But
compare, like as I gave you an example, if you compare yourself that you took 50 points in your first semester, right? And you got like 4 points up to 54, that's an 8% increase. Okay. But next time when you go to 54 and you get only two, again, 4 points higher, that's not an 8 point increase.
yeah,
That's less than 8 point increase. So in this case,
yes.
257 is the base. And if with 257, 224.8 is coming, so it has definitely come down.
Or can we also consider this one always? That means like in 2022, the inflation was like at the top, like really peak. But now slowly we are seeing again inflation going back up. Like if you consider like month over month, it is
Yes,
again it is
yes. It has gone up a little bit, definitely. And it's not going to go away. Like everybody, if you see, they have the projections that inflation will be 2%, 3%. No, it's not going to be 2%, 3%.
okay.
See, one thing we need to understand that China has opened up. Okay. With China opened up, now Turkey had a massive earthquake.
Earthquake.
The need for resources, the need for metal, cement, food, everything will rise exponentially. The demand, the
Hmm.
supply is still the same. Supply has not changed. Okay, we still have Ukraine and Russia war in place. So, considering all those factors, the prices will go up because the demand has increased. If
Hmm.
China was still at COVID lockdown, they did not have that kind of demand, and you can see clearly in their GDP. They were struggling with the demand. Now that demand will creep up, and the resources are still limited. We have not increased the resources to increase the supply. So when people will fight for the same resources, the prices will definitely go up. And when the prices go up in China, majority of the manufacturing is coming from China. So that will have a ripple effect in the Europe and US economies.
But not yet.
Not yet. It's going to take slow, and steady. So anybody who is thinking that we will come down to 2%, 3% inflation, they are really, really optimistic.
So we can expect it like something like in 2, 3 years, maybe.
Maybe next year. Maybe next year. Once
Okay.
things will cool off, then maybe next year we'll start to see. See, inflation, if you see, go back into the history, 1970s, 1980s, when the inflation, it took almost 10 years to come down. Almost 10 years.
Okay.
So
So isn't it right? Like just to think it this way, ki, like Fed will be more aggressive because they do know that like these things are coming into play. So can we expect like next time Fed increases like interest rate and like they'll make something like maybe they'll do in 25 next time, but they'll do couple of 25 more, like one or two more.
that's what they clearly said, that they're looking for a couple of more in
Hmm.
March and maybe in May.
But the market isn't pricing in that yet.
Market is ignoring it. Market is saying no, the inflation will be less, and they will be most likely cutting the rates by the end of the year.
Hmm.
That's what market is hoping for. And market is also not considering that the Federal Reserve is also cutting down on the balance sheet. So they need to cut down by almost 1 trillion. They have almost like 1.5 trillion off from their balance sheet. So with this supply same or similar to what it is now, demand going higher, the liquidity getting less and less, how can market go up? I'm little hesitant to understand that. Again,
Yeah, from 1 month, the market is like there is no tomorrow, and it has been just like going up. Like for example, Tesla, it record 100% all way like on in this like from Jan 2nd or something, it was 80. It is at like It touched 200.
It not that it actually went to 214.
Yeah, I mean, like, yeah, 240. Like, it's more than 100% increase in just a month.
Yep. So let's see how it goes tomorrow. And again, this is my understanding of the CPI. Maybe I am wrong. Maybe I'm not able to understand it properly, but that's what I could understand from this piece. And this is
Hmm.
the Department or Bureau of Labor Statistics.
Yeah.
Okay. This is the survey which will define the weightages. This is the data collection for 2022 and measures the using 2020 base. So instead of 2022, they are comparing with 2021. Sorry,
Oh,
that's what they say. CPI major price change using 2021 market basket index difference period. So that's
wow.
something. So instead of January 2022, it should be January 2021. This one.
Oh, it has went up a lot. Then even like just now you were explaining about the fuel also. Even if it is fuel, fuel has increased drastically because in 2021 we were getting like per gallon we were paying something like what 1.7, 1.8. You remember, Naval?
If you see in January, it's for around 50 to 60. Yeah.
Yeah.
And now it's like, so let's see. That's why I'm saying it's going to be very confusing. Let the first number comes out tomorrow. But
Hmm.
I see that inflation may have spiked, but not more. But again, these are the numbers which nobody has any control.
Hmm.
We can only estimate, expect, but whatever the numbers are, they will be there in the market at 8:30 tomorrow.
Yeah.
Okay.
मैं तो short हूँ भाई. Like I'm like I don't know why like my hunch is telling me that like but I'll wait till 9:30, not even like sorry 10:30, not even 9:30, because always the first move is like they'll just
Now
look at the numbers.
let's come to this ES thing. Okay. So ES is holding this bull flag.
Yeah.
This is right there. It's holding it. Okay. Now, whether it breaks out, break down, that will be decided tomorrow morning. If it breaks down, then we are hitting towards 3995,
4,000. Yeah. I
where
can
we
see.
had the base. And
And
from there, that's a 34 EMA. That's the important Fibonacci level. That's a trend line level. So 3995 is make or break for the market. If it loses that, we're going to hit 3850, 3860 in straight line. If we hold this area, because right now we are holding 12 EMA, we actually had a, if you call this a morning star right there, because
yeah.
from 4200, it's a morning star. Now, whether we can have a big morning star follow up, because we need something substantial to break this 4170 area. If we do that, I do not think we'll have any issues whatsoever to 4320 area.
Yeah.
But again, it's not something which we can expect. It's that the level will come and will take a trade based on those levels.
Okay. And one more thing, I was just like doing retracements on these ones. So, for example, like recent high to yesterday's low, if you draw a retracement by today, like the candle ended exactly at 0. 0.6.
That's the important number.
Yeah. And it got rejected. Abhi, like it is going down. But
See,
like if
Abhi ke liye I will not say anything because the volume will be like, it's only 25,000,
yeah,
which you can totally ignore. Usually they have 2 million, 3 million volumes. So 25,000. If you see at 8:30, 25,000 will be in 1 minute.
yeah,
So I'm not considering the futures right now. But what I can see is it's setting up for a flag. It gives me confidence that yes, it's a morning star setup. So if we have a follow up, we should have a massive follow up. It's holding the 12 EMA. It's showing me a bull flag right there, right there. Like if you see the bull flags, wherever we have the black,
Yeah.
it has moved up. So black, it has moved up. So now I maybe it opens high and then comes back down. I don't know. But as of now, I expect it to go higher.
Hmm. And I have one small question, Alvay. Like if DXY is going up, that means like the dollar value is increasing. So can we expect that like jo import ka price, like the prices which America pays for importing, those will go down, right?
Import is what we get in. Import prices will,
Yes.
if dollar is strong, import prices will be less. Yes.
Hmm. So even that means, can we say that like stronger dollar is good for to controlling the uh, inflation?
Strong. But in that case, companies also lose this margins, right? Substantial amount of margins. So, because
Hiring more.
companies
Yeah,
are global, they are not specific to US.
true.
So they also do export,
Hmm.
and they also have to, like in cross country terms, like if companies, some companies, like for example, a company from US has an office or a subsidiary in India. They were used to make 15 crore profit. Now they are still doing 15 crore profit, but in terms of dollar, they have actually lost.
Money. Yeah.
So it's going to impact their cross currency margin. So currency is not an easy thing to expect. It can have both sides, like imports and exports and margins impacted.
Hmm. Okay. Okay. Thanks.
No problems. So guys, in terms of ES is making a morning star, and it's a good morning star, reclaim of 12 EMA. Again, anything can be possible, but the three bases for morning star is you have a down move. So we went into a down move, right? We had 1, 2, 3, 4. We are making lower lows, lower highs. If we break 4170, that will be a confirmation for me to go long. 4170, then we should see 4210, which is the previous target area, 4260, 4325. These are three targets which I'm looking at once we break 4170. If we lose 4170 and come back, then I will not go long. I would then see whether market holds this candle or the 4110, 4115 area. 4110 has been a real support for the market, which is the 12 EMA also. Plus, it was the highs here, 4110 area. So in this 4110 area, we have seen support. 4110 has been uh, somewhat supported by the 12 EMA as well. So in this case, I would say loss of 4110 will be really bad for the market. So 4170 on the higher side, 4110 on the lower side. In between, it's going to be tough to trade. So like CPI days are going to provide you big moves. So whether we have a breakout or breakdown, these two numbers, 4170, 4110, keep an eye on that. 4110, you're looking to 43995. 4170, you're looking for these three numbers. And also we need to take into account, Apple was looking strong. Okay. AMD was looking strong. Nvidia was looking strong. Microsoft was strong. Meta was strong. So if you see Nasdaq or S&P, see how many stocks were strong. So if you have that many number of stocks strong going into something, it means that there is some relative optimism in the market. So if we miss out on CPI, the impact will be really bad. Like if CPI comes to be 6.6, 6.7, we'll see blood red on the screen tomorrow. Because we are going in with a very high expectation that CPI will be light. So 6.26, I think will be okay. Will move positive. Again, 4170 is a number which I would consider to go long. If it's above 6.3 to 6.6, that will be a really, really big red flag for the market. So that's the only two options I have. Either we are going green or we are going to go red. We are not going to be in a choppy state. We'll have a breakout or breakdown very clearly, very decisively. Now, let's also talk about NQ. Same thing is NQ. NQ is not a potential evening star, but it's a bullish engulfing. It covers the selling of both the 2 days today, took the support of 12 EMA and bounce. If it crosses 12,600, we're up for 13,000. That's about 3% move on NQ. Same setup. We have a bull flag. We're coming a bull parent. We're coming down. We're coming down to a point where we need to decide whether we are going up or we are going down. So both the 12 EMAs have in ES and NQ have provided support. So loss of that will be really, really bad. So 12,400 is the 12 EMA right now. Loss of 12,400 will bring to 12,000. The gain of 12,600 will bring to 13,000. That's the clear number in NQ. Anybody has any questions? That's what I wanted to share tonight. I'm not going into individual tickers, but that's what I wanted to share. Anybody has any opinion, any other thoughts, anything you come into your mind? Because in the live market, it's not easy to discuss, to understand. But right now we have the opportunity, we have the time to discuss. I have shared you the mic. If you want to come, talk, discuss, share your thoughts. Yes, Vivek.
Hi, Noel. One small thing, like today the CRM was like really, really strong. So tomorrow, if we get like good CPI numbers, CRM can be a really good play.
See, CRM, I think 166, 167 is a really good base for CRM. 166, right? So
Hmm.
we need to break 172. Again, it came back and tested the 12 EMA. So if we break 172, I think then it will have much more move into it. And if I look at the flow, I was looking at some of the flows. So the 400 puts, they came in at the last minute, like 414 for a million. And then 412 puts of SPY, they were also sold. If you see this, 412, they came at after hours. So they were sold at 855, 857, 850. So I don't know whether they were closed or they were actually sold, because the open interest for 412 was really high. So I need to see whether about 277, 250, that's about 527, 673. That's about 1200, 1400. So 1400 is a round number. So whether it's going to add into the open interest or not. So if I look at the open interest for today, so the volume was 4,800 today, and the current open interest is 9,932. If the 1,400 is added here,
Hmm.
then I would love to see whether we are going up or not, whether we are going to, because there was some increase 1,000, 1,006 in the last few days into the sports.
Okay.
So whether these puts were closed, sold, I don't know. That will be clear in the tomorrow's market. Also, there was some like 3:15:24. These were some massive sells right on the clock, 4 o'clock, 26, 26, 26. And I think they are fresh. There were no previous open interest. So the open interest was 177 and now is 1968. So if they were sold, okay, they were sold, then they will be added into the open interest. And I understand many people don't even understand the open interest. Open interest is at one time. What are the open positions at the exchange
Hmm.
for a particular strike?
Open as in like ready to sell or like readily
It
available
could
to
be
put.
buy, it could be sell, both. It's an open position.
Okay.
Like if you are buying, somebody has to sell,
Yes.
right? If they are selling and they're selling to the market makers, then it's an open position on the sell side.
Hmm.
So it's a little like you have to like for understanding open interest, you have to spend time on the data to understand. So let me read. Ashka Shani, is VIX still getting? I never used VIX because VIX is something which is a delayed. It's a lagging indicator. VIX is based on the momentum and on the Greeks of all the options in the index. I have never used it. I may not recommend to use VIX. It's better to look at the price right away. What levels would you be looking for a failed breakdown? For a failed breakdown, Tarun, you need to see for today's or let me go to ES. For a failed breakdown, I would consider around 4100. If 4100 is gone, then it's gonna go test it, comes back up, possible. Failed breakout 4170. Failed breakdown 4110. Will CPI set the trend until the next Fed meeting? Most likely, yes, Mitchell. Most likely. Anyone else? See, UVXY is still a better indicator than VIX or DIS. DXY was an indicator when the market is leaning into the currency. Right now, the currency has cooled off, so market may not take a cue from it. It's in like a normalized zone, so it may not take a cue. VIX, I don't recommend. UVXY is still better. I am a little bullish going into the tomorrow, Santosh. But again, I could be wrong at 8:30 because these numbers are not my numbers. But I think if we have to break out, tomorrow will be a good area to break out. If we fail, we'll fail big. All right, guys. Thank you very much. I hope we'll have a better day tomorrow in terms of moves. Mr. Gulati, I just answered that I'm expecting 4170, 4210, 4260, 4320. On the downside, 3995. If 3995 changes, then it's going to be really, really bad. All right, guys. Thank you for watching this. If you have any feedback, please share. Otherwise, you can like and share my video. Thank you very much. Good night. Bye-bye.